Hey team, hey traders. My name is Kenya Horton and I am a platinum leader with iMarkets Live. I'm also a full-time trader. And in this video, I just want to give you guys three profitable tips to use with KiSS strategy, Kenya's instant scalping strategy. It is a strategy that I created. It works absolutely fantastic. I've seen a lot of you kind of take it and put your own spin to it. And I just have so much to offer you guys that I think it obviously will help in your trading. There is a playlist on this scalping strategy. If you go to our YouTube and click on playlist or however you get there, it's a KiSS playlist. Just look for KiSS playlist. You'll see all the videos I've created on this, and I just continue to keep it coming to try to help you guys. In the description of this video, there is a public Telegram, link to a public Telegram you can join. I drop trading ideas in there. If you go through the videos, you'll learn how I post trade ideas, trade setups. I also have a lot of resources in there. There's a training manual on this strategy, complete training manual. I'll show you how to access that. So let me go ahead and take you there. Don't forget to click subscribe. I have a lot of great stuff that I always share, whether if you're in IML or you just trade by yourself. A lot of great stuff to share with you. So I am going to show you our public Telegram really quickly and just show you how you can benefit from that. If you actually click on the link, it's going to take you to Brian Kenya Horton, which is right here. This is our actual public Telegram. You can join this Telegram and you'll see something called shared media. You can access it from your phone or your computer, but you'll see documents that I've shared in here. I share a lot of ebooks, all for free, you guys. There's videos that I share in here, just anything to help you guys be successful and to help you succeed. It's in here. So trading journal, all of that. All you have to do is click on documents, find what you need, and you are good to go. So I want to give you 3 tips, okay? So 3 tips. Number 1, when you are trading the KiSS strategy, the very first thing we want to look for is if the market is trending. Number 2, we want to find or identify some type of pattern if possible. 3, we want to enter close to a level of structure, which is going to improve your entry technique so much. So let me go through that really quickly. You'll see here that I dropped a trade idea on Euro JPY and USD JPY. And I'm particularly going to focus on Euro JPY and show you exactly what I saw when I took this trade, why I was so confident, how I got into immediate profits, and just show you that. So you'll see a lot of times that I have multiple entries. I do twin trade, and there's a method to that. Guys, you'll find your own spin. There is no exact way to trade this strategy or any strategy. There are some things that I just noticed that I do really, really well, and you're going to find out the same thing yourself when you're journaling so many trades, okay? So let's go to Euro JPY. I'm going to take you to an example chart. Now, I called a sell on this, okay? So what happened is that the web analyzer, which is a trading system that iMarkets Live provides, you have to be an IML subscribed customer to access this, but the web analyzer basically is a tool that finds volume in the market for us. So what you'll find is during the New York or London session, about an hour after the market session open, there's a lot of volatility in the market, which means that price is moving pretty fast. A lot of buyers and sellers in the market, a lot of volume. So you're going to find a lot of trade setups. You just have to know how to find them. So what the web analyzer does is it gives us high probability entries into the market, kind of says, hey, here's a trade you might want to look at. This thing is really accurate. You then just apply your own analysis to it. So for example, KiSS strategy is on the IMO web analyzer. It stands for Kenya's instant scalping strategy. You'll see it right here. If you click on settings, it's going to give you a list of strategies. You can select KiSS, make sure you save the settings, and it's going to load. So I already have the Euro JPY currency pulled up, and this was the chart from this morning. So I'm going to recap this with you right now. I'm on a 1-hour time frame. As I said, the very first thing that you want to do is identify the actual trend. What is the trend currently? We're short-term trading, so we don't want to be in the market for a long time. We don't really need to look at the daily. A lot of times I do, because I do like getting an overall picture. But if I'm only looking to be in within minutes and out within minutes, I usually just want to know what is the trend for on about the hour, 4-hour time frame. So I quickly just go to the hour time frame. What I do is I hide all of the other indicators, okay? So I get rid of the indicators. I also will hide the Bollinger Bands, all right? So you can do that there. Now, I'm actually probably gonna go to Trading View because I like to chart and do my analysis here. It's just a little bit faster for me. So I have Euro JPY pulled up here. I'm gonna hide all of the indicators there. And the next thing that I'm gonna do is I'm going to hide the Bollinger Band. Just wanna get rid of all this stuff. Now, you can use the indicators. Indicators are very helpful. Some people believe in them. Some people don't like them at all. They do bring you to the party a little bit late, but I like using indicators as confluence. It just gives me greater confidence into the market. But as your knowledge expands, you'll probably find yourself using indicators less and less. That's what has happened for me. So as you can see here, if we go to the 1 hour time frame, we first want to identify, is the market trending down? Because IMO Web Analyzer told us, hey, here's a potential sell on Euro JPY. So we draw our trend line, and all I do is take a trend line over here on the left, and I find swings, and I just connect those swings, okay? So you see here, we have a swing here, and we have a swing here. So you take your trend line, I just go 1, 2, run it through. Find one point, find the next point, run it through. You have a downtrend. You see that price is respecting this trend because it's bounced off this trend line and continued short in a short movement, okay? So we say, awesome, we're in a downtrend. Price is respecting our downtrend. And the next thing, we want to keep looking for clues, because if we're going to get into a sell, we need some confluence. We need some entry criteria, rules that are checked off the list that says we are good to go. So number one, it's trending, okay? Now I have a whole training manual on this, but this is just 3 profitable tips. We want to trade with the trend ideally. You can trade against the trend, but you're going to have a greater trade result, a more positive trading outcome when you're trading with the trend, all right? So we see that we're in a trending market. Number 2, the thing we want to do next is we want to identify some type of pattern. Now the market is always creating these patterns. I'm more of a technical trader. I do pay attention to news, but I mean, it's there, guys. Like, the market proves that it forms these patterns all day long, and they're just constantly repetitive. You'll see them over and over and over again. So immediately when I look at this, I see a bearish flag pattern. You'll see an impulsive move here down, and then you'll see where the market kind of created. Like right now, we're in consolidation period where the market is not really doing much of anything. It kind of moves in a range. And what happens, let me show you another example really quickly. I'm going to show you an example of a bearish flag pattern, and I think you'll have a better understanding. So some people have a hard time identifying these patterns. As you get better, it'll be easy to look for them. This is a bearish flag pattern. So bearish flag patterns, you're typically going to see them in a downtrend, which means that price is moving down, not up, okay? So typically what you'll have is a sharp move down. Like, let's say New York session just opened, the bears come in and push price down on Euro JPY, and we see this sharp move down where price just dropped, right? And then what happens is that, let's say around lunchtime in New York, price starts to slow down like it is right now. And what happens when price slows down is this consolidation period starts to happen. This happens all the time. You're going to find it. Basically, you'll see where price moves at a range, all right? There's no sharp moves going on. There's not a lot of volume in the market. It's not really the best time that we want to be in, especially as scalpers. So you'll see this flag. We call it a flag because it looks like a flag, and you have your flag pole here that forms. And then once the market, what's happening during this consolidation period is that the market is basically kind of getting itself back in balance because it's out of balance. The bears have come in, pushed price down. They've proven they've got control. And now we need to reset. We need to replenish. We need more buyers and sellers into the market so that once volume picks up again, we can determine which way price is going to go. When we have a bearish flag pattern, we expect that the bears are still in control and price is going to potentially break to the downside. So that's the move that we look for. So if we know that we have a bearish flag pattern, that can also be another entry technique or an entry, part of our entry criteria for entering that trade, okay? So if the web analyzer calls a sell and we identify a bearish flag pattern, we already know we're in a trending market that's trending down, we're in a downtrend. 2, we have a bearish flag pattern. So we say, excellent, okay? And it's telling us to get into a sell. We're almost there. We're just checking things off of our list. So after we quickly look at this, and this goes by so fast, so don't think it's going to take you forever, okay? You have to be very patient with trading to find the ideal setup. So once I identify that, if I identify a pattern, I have to identify patterns because I don't want to get caught up in a breakout and I'm against it and I'm on the other side of it. So these things are important, okay? So after you identify that, you can then add your other indicators back on. You can add your Bollinger Band back on. And Bollinger Bands are great for confluence, guys. You know what to look for with KiSS strategy. There's 4 confirmations that we look for. But as you can see, once you have those 2 things checked off, the very third thing you want to look for is after you've identified your 4 confirmations, we're going to go to the 15-minute time frame because that's where we enter. But let's say that, okay, we're looking to enter on a sell. We're in a downtrend. We identified that. We also have identified a bearish flag pattern. And I forgot exactly where that move took place. I believe it was, I'm just going to use an example for now, okay? But let's say that it took place around right here. See that? So you see where we have this long green candle here that is approaching this trend line. Price bounced off that trend line, and then we got our sell candle there that started to form, and all of our other indicators also matched up. Now, the indicators are going to get you in late. That's just the reality, guys, okay? Indicators are just, use them as confluence, but really get used to reading price action and trusting your bias of what price is doing. If you're trading with the trend, the market is flowing with the trend. You have other ideas that have confirmed that, hey, sellers are pushing this price down and you are good for a sale. You see that price is respecting this trend line. Enter for your sale, all right? But these other confirmations are going to give you even greater confirmation to enter into that trade, to know that, okay, this trade is going my way. That's exactly how I approach this trade. I enter through market execution. And that third tip that I really want to stress to you guys is entering close to a level of structure. So when you start to enter, when you get ready to enter, when you say, okay, I've identified all the confirmations and I'm ready, I'm possibly ready to enter, where am I going to enter? Now I enter off of the 15-minute time frame. I'm going to hide everything again and show you something. So if I enter close to a level of structure, what I mean by that is that the market basically moves up and down and at a range, right? When it's in an uptrend, the market is making higher highs and higher lows. When it's in a downtrend, the market is making lower highs and lower lows. So for example, this is a lower high, okay? Or a swing high, we call it. So when I want to enter to a level of structure, if I see that price is starting to move short, I don't want to get in the middle of the momentum. I want to get in close to a level of structure at a major area of support or resistance. Why? Because one, I'm going to, first of all, it's going to give me a better risk to reward ratio. So if price, for example, comes to this area, respects this trend line, what do you think is going to happen once price starts to drop and I enter here, right at this trend line? I'm going to go immediately into profit, right? So you can either, when you have these different confirmations, you can enter through market execution, or you can do what I do sometimes. I say to myself, okay, where is price hitting this trend right here? Where's this major level of resistance here? It's at 124.22. That is the best possible price that I'm willing to enter this trade. I will do a sell limit and do 124.22. And once the market reaches that price, it gets me into the trade. And then once that price starts to drop, I'm already in profit, all right? That's what happened with this trade with Euro JPY, and I showed you the profits of that. So that is the benefit of entering close to a level of structure, close to those higher highs, higher lows, lower highs, lower lows. You just don't want to enter when you see that you have, all the confirmations and you're like, oh my gosh, price is moving, and you see that sell candle is right about here. You want to find the next level of structure of where to enter to. Find a swing high, swing low. But of course, if we're trading with the trend, we want to enter as close to the trend line as possible, or a major zone, I would say, major reversal zone, where that price is either going to respect that area and it's going to continue in the desired direction, or look what happens here. This is another reason why entering close to a level of structure is important, because let's say that if price were to break this trend line, okay, so we're looking to enter right around at the trend line, but what if price broke? Because sometimes it does, a lot of times it does. So if price breaks, most times when price breaks, it's going to retest. It's going to come back to that area that it broke. Okay, so resistance will then become support. Not always, but majority of the time, a lot of times. So the reason why we want to enter here is because if price does break this trend line, we can cut our losses very early and we can get out of the trade with minimal risk. However, if we were to get in the trade when it's already moved so much, let's say, you spot that setup, and let's say you get in for a sale and it's already dropped 15 pips and you're like, oh, I'm getting in for just 3 pips. Well, what if it reverses and it pulls back to this trend line, breaks this trend line, and now all of a sudden you're negative 20 pips, right? That's what we can't afford to happen. So again, guys, the 3 tips that I am giving you in this video with KiSS is preferably you want to trade with the trend. If you counter trend and you're trading a correction or a pullback, I advise that you probably go for just a few pips. You are not wanting to gain a lot of pips. But again, trading with the trend is going to give you a more favorable outcome. Totally up to you. I do both, but majority of the time I'm trading with the trend because that's just smart. All right, so trade with the trend. Identify if the market is up or down, if you're entering for a buy or a sell. Number 2, you want to identify a pattern if possible. So bearish flag pattern, a bullish flag pattern. Just try to identify a pattern. You'll get good with that over time. If you can't, don't worry about it, but you will start to spot them. Number 3, enter close to a level of structure. So just remember that drawing these trend lines are so simple. Draw your trend lines, guys, and pay attention to how price is moving and respecting these trend lines. If you see that price, it's wicking, you see how it approaches the trend line and there's a wick, it's telling you that, hey, this is not going to go any further more than likely. Sellers are going to keep pushing this price down. Buyers don't have enough strength to keep pushing it up, okay? So if you guys have comments on this video, go ahead and drop them in the comments section. Make sure you click subscribe, join our public Telegram. And I hope you guys are winning with this strategy. It absolutely works. Again, find what works for you guys. Until you have demoed at least 100 to 300 trades, then tell me that it works for you or it doesn't work. But until you've demoed that many trades, you can't say that it doesn't work. So it's working for a lot of people. Take it and make it your own. And I just hope that you guys continue to win. Thanks, guys.